Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing a good amount of a pullback. We have the mid-cap index, which is up around 2%. Advanced decline ratio, which is standing very steady at around almost 2:1 on the Bombay Stock Exchange and 5:1 on the National Stock Exchange. But joining us this afternoon, we have Rajat, Bose and Sharad Avasthi to take you through all the queries. Rajat as well as Sharad, welcome to the show. Well, Rajat, let's kick off the show with you. It's a good traction that we're seeing for the markets. They're back into fine fettle. What is your sense? Do you think that it would be prudent to probably take some longs now?
Yeah, good afternoon, Ekta. Good afternoon, Sharad. What I would like to say here is that, yes, we are noticing some kind of a recovery, but certain levels need to be taken out by the Nifty. After that, you can actually be a bit more confident in taking long positions. Of course, I'm referring to short-term long positions. If you are buying for long-term, then definitely based on the fundamentals, you can always buy. A point here is that 24,250 to about 24,350 is actually a supply zone. This supply zone needs to be taken out by the Nifty decisively. And for the earlier thing, that is, whenever there is any dip, you continue to buy. That kind of a scenario will come back only when 24,500 to about 24,600. This zone is also taken out with a lot of buying and good volume activity. That is the thing. Now, what you see is still more or less a pullback kind of a thing, although market is steady at a higher level, but still only the 50-day moving average, which is around, say, currently it is around 23,975, where it is located. If that gets taken out, then there would be some kind of selling. Regarding Bank Nifty, very briefly put, it needs to take out 50,400 and 50,900. These two levels are very critical for any upward journey.
Okay, all right. Well, we definitely do have some momentum on the which is supporting us today. In fact, a lot of stocks which have picked up a little bit of pace. Sequence Scientific, for example, is up around 5% at this point in time. Skipper is also doing well, up around 5%. Well, let's get to the first question. Then we have Shashank, who writes to us from Mumbai, holds 300 shares of Tata Power, which he's bought at around 471. So he's sitting on a loss at this point and wants to know whether to hold or to exit this particular counter. It's in focus on account of numbers. So Sharad, over to you on this one.
Yeah, I think we can continue to hold. A large part of the valuation is being derived from the solar business, whether EPC or the rooftop solar. And I think that trajectory is very strong. So roughly, if you do an SOTP, I think over the next 1.5 to 2 years, you could expect targets of around 450, 475 on the stock. So I think that's a good bet to hold on to, and the renewable part of the business can continue to trade at higher valuations. The existing business or the historical business, legacy business, might not be as robust. They might grow at a regular rate. But the renewable part is something that could grow leaps and bounds. The only flip side could be that maybe the depreciation does not come that fast because it has already been discounted over the last 1.5 to 2 years. But other than that, I think largely you don't see much of a hiccup across the board. And I think rooftop solar, if they can just pull around some strings and grow that business, that could add some kicker to the valuations. So I think hold on for targets of around 450 to 490, 475 to 490. I think that's the level you should hold on for.
Oh, okay. And what about the technicals? The stock has done well, but Rajat, how would you approach Tata Power?
There is an unfortunate thing there. That is, the person has bought it at the all-time high of 471 recorded on, say, 2nd of August. So if you are buying at the all-time high, then you have to wait for some time before you make money. I quite agree with Sharad that this is actually a range-bound counter. It can bounce back again to 475, 480 kind of thing. So I would suggest stop loss below 400 and hope for the best that it would cross 471.
Okay, all right, cross 471. You're hopeful of that. Well, we have John, who writes to us from Kerala, holds 200 shares of Federal Bank, which he's bought at 98, wants to know the future prospects of his holdings. So Federal Bank is what he's bought. He's sitting on a good profit on this one. Well, technically, is it is it good for more according to you, Rajat?
At the moment, it is pretty weak. If it were to fall below 185, then it would become even weaker. But Federal Bank has been a good performer, so the investor can continue. I would suggest that stop loss that is around, say, 184 or so. If it were to fall below that on closing price basis, and if it is a short-term trade, then he better seek an exit. Otherwise, if it is a fundamental play, then definitely you can continue to hold.
Okay. All right. Well, if it's a fundamental play, then one can probably continue to hold. Fundamentally, Federal Bank, Sharad?
Yeah, I think you can continue to hold. The asset quality has not been much of an issue for the bank, and I think growth numbers will also be around 18 to 20% over the next 2 years at the advances level. In terms of book value, I think it usually does oscillate around 1.6, 1.7 times price to book. So considering that it continues to oscillate around those levels, very optimistic scenarios, it can go to 2 times. But FY26, you're looking at a book value of somewhere around 205, 206. Considering it gets 1.5, 1.6, I think you should look to exit anywhere between 250 to 300 if you get over the next 1.5.
Okay, all right. Well, we do have Saransh, who now writes to us from Manchester, UK. So we have an international person who's writing in, holds 200 shares of HDFC Life, which he's bought at around 550.98. So he's sitting on a good profit on that one. And he's bought it since a few weeks. He wants to know what to do, whether this is the right time to book profits or he should probably hold it for the future. Well, tough one, in terms of HDFC Life, he's sitting on a profit. But do you think it's good for more, Sharad, in terms of the fundamentals? And what would your target price be on this one?
Yeah, I think in the medium to long term, it might be a good story. Insurance long term should be very good within the private space. This is one of the larger companies that you're betting on. And I think that post-merger, even the insurance business might look at aggressive growth targets, as we have seen with the bank going aggressive with respect to long-term growth targets. So initially, I think we have targets of around 750. So that's not much of an upside over the next 1.5, 2 years. So if you can continue to hold on very long-term, I think then it does make sense. The whole insurance space does make sense. But I think 1.5 years, you only have around 50, 60 rupees kinds of upside according to our target of 750. And I think compared to this, maybe LIC is a better bet at these valuations. I think there, even if you trade at 1.5 times EV, you could be looking at somewhere around 1400, 1450. So I think the upside potential probably in an LIC is there, and the valuation comfort is also larger compared to HDFC. But if you want to bet within the private sector space, a lot of news is happens in the sector. So I think within there, maybe HDFC could be your best bet to have.
Okay, all right. Well, what about the technicals of this one, Rajat? Because it's not done much on a year-to-date basis or, in the past 12 months. So from that perspective, what would your target and stop loss be?
Target will be something like 770 and 770, 775. And the stop loss as of now, I would say most likely, if I can remember correctly, this guy is a short-term player. And in that case, maximum downside, the stop loss should be placed below 650, not below that.
Okay, stop loss should be placed below 650. Well, we do have Madhu, who writes to us from Tamil Nadu, who holds 200 shares of Geo Financial, which is bought at around 372. So sitting on a loss there, wants to know what to do, whether one should book losses on this one. Rajat, what's your sense? Do you think that one should probably exit at these levels, or the technicals look okay?
See, since the investor has already seen so much of a downtrend, and now the stock is coming very close to its 200-day exponential moving average, I would suggest that at 300, the EMA is located. Let it break the level of 300 and go further down and close there. only then one can think of getting out. Otherwise, what is the point that he has held on to it for such a long time? So generally, when 200-day is tested, even institutions come to buy or big players come to buy. So I wouldn't suggest getting out right now. Put a stop loss below 295 on closing price basis. Continue to hold on.
Okay, all right. And fundamentally, Sharad, your view on Geo Financial?
I think as a theme, if you're a long-term investor, I continue to remain bullish. I think the type of things that they can do in the business with the type of integration and the group support and the type of tech support and the reach they have with respect to, retail and shops and everywhere. I think it's a very unique proposition that can play out very nicely. But it was a much better idea maybe a year, a year and a half ago when it was trading at around 220, 230. The price to book multiples were also very much comfortable. Right now, unless and until you can extend your horizon to 3 to 4 years, I think from these prices to make more money would be difficult. It's already trading at 1.45 times price to book. And I think the businesses are all unique and might present a very big opportunity, but they will take some time, as with most finance companies. It cannot happen at a very fast clip. Though I do expect that Geo probably would grow at a faster clip vis-a-vis traditional finance companies because of a strong group backing and a strong balance sheet. But at these valuations, I think unless or until you extend your horizon to 4 to 5 years, I don't think 1.5 2 year kind of horizon from these valuations you can make much money out of Geo.
Okay, all right. Well, we do have some details coming in on the July general insurance data from ICICI Lombard. The premium is up around 15.7%. Market share stands at 10.3% for that particular company. General insurance is what they focus on. But we have Shruti Jain, who writes to us from Pune. She's asking if she can buy Zomato for the longer term. It's already run up significantly, but it does have that Blinkit option. Likely to break even soon, and they are getting into new verticals of business as well. What would your sense be, Sharad, from here on, whether Zomato would be a longer term stock of, which one can probably start nibbling on at these levels?
The traditional metrics wise, you cannot justify Zomato, I think, but we are expected to see abnormal growth in earnings because of the Blinkit thing. I think it was something that was refreshing and catering to a need that every household had, especially on the urban centers. The type of urbanization push that we expect in India over the next decade or so, it might be very good for Zomato, especially more so for Blinkit. And I think that growth would be good there. But to expect that linear growth would happen at the same rate at which it has happened since the launch, I think that would be a bit misleading. I think they have catered to the initial demand. And beyond that, the second level of demand growth will actually come from, gradual growth would come in from here on. But obviously, since a platform business, I think growth rates would be very robust, but it's already trading at 10 times EV to sales forward. I think the probability of you making money from these levels might be difficult unless and until substantial upgrades come in. So I think it's better you avoid it at these levels, get it at a correction over the next, 6 months to 1 year. That's the good place to get into it.
Okay, and technically, Rajat, do you see further upside for Zomato, which is zoomed in any case?
First, a caveat. I personally hold Zomato. It's a four-bagger for me as of current prices. I would continue to hold on. Having said that, I would say that in the short term, unless it crosses 280 decisively, it may consolidate between, say, 250 and 280. Once 280 is taken out, then 310 and 322 are the next targets. But it has moved up a bit too fast in the recent past. So there will be some consolidation, what I expect. But at lower levels, I would say that definitely one can buy. But now, this rise, I personally feel, having studied the fundamentals, that Blinkit might have given a lot of fillip to it. Current Zomato performance, it is okay. I quite agree with Sharad. It is a gradual mover from current levels.
Okay, all right. Well, on that note, we need to take a short break, but a lot more queries on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. Well, we still have with us Rajat, Bose and Sharad Avasthi to answer all of your stock queries. Well, we now have Atish, who writes to us from Mumbai, holds 2,000 shares of Yes Bank, which is bought at around 18.5 rupees. So sitting on a profit there, wants to know what to do, whether to hold or sell this particular counter. The stock is gaining today. But let's start with the technicals first. Rajat, what would your view be on this particular counter, on Yes Bank?
The chart structure suggests that, I'm talking about the weekly chart. Weekly chart suggests that there is definitely some consolidation happening at the moment, but unless it falls below 22 and closes there on weekly basis, it would not be weak. In fact, it can move up, and once it crosses 26 to 28 range, then you can expect 30 to 32. I would suggest a hold with a stop below 21.50 on closing price basis. That's it.
Okay, all right. What about you, Sharad, on Yes Bank? What would your thoughts be?
Yeah, I think on traditional matrices, again, valuations are fair. They are expected to grow at a decent rate over the next 2 years. So I think if you are just holding on traditional matrices, you could think of exiting at current valuations. But I think the deal as it is being sought after, in case something happens on that deal where the stake sale does happen, most probably one of the suitors, Mizuho, has dropped out of it. But there are still two people on the run. So I think once one of the dealer, if the deal does finalized, I think ideally you could get 3 times price to book on a 15-16 kind of forward book value. Then probably this is a story that can go up to say anywhere between 35 to 45. So that means a decent upside. So I think you should play on. Rajat has given you very decent levels of stop loss, etc. So you can trade according to that. And I think wait for that news flow to come in. I think if the news flow does happen, that should be at a premium to current prices, and that should result in some fill up to the prices.
Okay, all right. We now have Mukul Anand, who writes to us from Shimla, holds 560 shares of IFCI, which he's bought at 89.36. So he is a short-term investor, wants to know what to do, whether to hold or sell. Well, a lot of these stocks have come off from those highs. For example, IFCI is down around 6.5% this week. It's down around 12% this month. It's a tough call, but Sharad, do you think that it's probably going to recoup to those levels and one should probably hold on to their holdings in IFCI?
I think even the rally was a bit overdone. I could not really understand what was so positive about it. But at the fag end of the rally, we start valuing everything from the chairs and tables to everything on an SOTP basis. But I don't think IFCI needs to be valued at these levels. These are obnoxious prices, and I don't think they are going to remain. So it's better you exit at whatever price you get.
Okay. And can you tell me about your view on this one, Rajat? IFCI, it's run up, handsomely. But now, on a short-term basis, what would your opinion be?
On a short-term basis, this parabolic run that IFCI has seen, if you look at the weekly chart, you will see the kind of parabola it has created. So I would strongly second the sell recommendation of Sharad, because here one should get out of it, because it can fall much further from here if there is any downturn or something sets in the market.
Okay, all right. Well, those are the Pidilite numbers. Net profit is up around 20% on a year-on-year basis. It's come in higher than what we had anticipated. And as you can see, the stock is reacting positively to it. The stock is up around 3%. 571 crores is what they've reported. Revenue is up around 4% this quarter at around 3,395 crores. Stock doing well, up around 3.5%. That's all the time that we have in the show. But do remember to email us your questions. We'll address them with our experts. Stay tuned. Closing bell up.